Good morning and welcome to the Wednesday session of the third week of the online platforms market inquiry public hearings. Today we're continuing with online classifieds, and today is dedicated to automotive. So we are beginning with Autotrader, a well-known brand, I'm sure, to consumers. Carfind is after that in the morning session, and then at 2 o'clock we have cars.coza. So I'd like to introduce from Autotrader, Mr. George Minnie, the CEO, and then also Mr. Fjord Nicolin, who's the General Manager for OLX South Africa, who also joined us yesterday with Property 24. So welcome, gentlemen.
Morning, Mr. Hodge. Morning, Shud.
Good morning, everyone.
I'm obviously joined in the panel by Ms. Tsepe and then also the technical team who have been probably dealing with you as well.
Morning, guys.
Mr. Minnie, I believe you have a presentation, so I'm going to hand over to you to share it in the virtual stage and then run us through that.
Great stuff. Thank you, Mr. Hodge. Let me just get my screen sharing up here. There we go. Can you see that?
We can, yes.
Okay. All right. Hi, Mr. Hodge, and hi to the Competitions Commission panel, and to all the public watching. And thank you for having me and Autotrader, and thank you for giving us this opportunity to present on this online intermediation platform market inquiry on Autotrader particularly. As Mr. Hodge mentioned, my name is George Minnie. I'm the CEO of Autotrader, and my objective today is to take you through the history and very high-level business model of Autotrader. And seeing that this is a public hearing, there's a substantial amount that I can't speak to, but I'm happy to speak to it in any private session. So broadly, to create some structure, I'm going to take you through 5 key areas, and jumping right into the first key area, and or should I say, before I jump into the first key area, personally, I've been with Autotrader since 2004, when the company was purely a print business, and today, having a deep understanding with my team of the South African automotive industry, as well as digital platforms, Autotrader has become an online-only two-sided marketplace. But it didn't start there. Autotrader was established in 1992 by Autotrader in the UK in its print form. And Autotrader South Africa grew to become a household brand name, distributing and selling over 110,000 magazines per month. Autotrader's print and distribution footprint was unmatched and hard to compete with. There weren't many printers at the time who could print the volumes and size of the magazine that we fortunately printed. But what was Autotrader's biggest competitive advantage became its biggest disadvantage as we needed to change, or as the business world puts it, pivot. This change took a very long time in South Africa because South Africa is very unique. In fact, our digital transformation was very slow compared to the rest of the world's auto traders. In a nutshell, we had to find a way to measure how in-market car shoppers' attention was shifting from print onto the internet, which was a very difficult thing to do in those days. And, looking at this chart in hindsight is 2020. But if you put yourself in the midst of this internet digital transformation, we had to understand the consumer. So we implemented call tracking at the time across our print magazines as well as our digital platforms to try and understand how the consumer was shifting and how fast they were shifting. This shift was our primary focus, but it left us very vulnerable. By 2017, however, we had become a fully fledged online business. On the cost, I must mention that we closed our commercial and agriculture magazines last year during COVID, but that part of our business is a very small part of the grand scheme of things. So today I'm going to be talking mainly about cars. With 100% of our car revenue coming from online sources by 2017, a small caveat in that I mentioned the commercial and agri magazines closed during the pandemic, would have closed anyway, probably by the end of last year. So the pandemic hurried it along by probably about 12 months. So we are now truly an online-only, two-sided vertical marketplace platform serving buyers and sellers of vehicles. Our mission is to create a trusted, safe, and transparent vehicle marketplace that empowers, enables, and improves the lifestyles of those that we connect. We've learned to harness the online network effects iteratively over many years as the business has grown. I must point out that harnessing the power of network effects is not binary. It's every day. And we do so more now than we could do with the magazine weighing us down. As I said, it left us vulnerable. And I'd like to pause there for a second, because taking advantage of scale and being able to drive value to our consumers as well as our business users by harnessing these principles has come over a long 15-year journey by consistently iterating towards the perfection of the day. In saying that, the success of Autotrader is not correlated to who its shareholder is. We have had 3 major shareholders since 1992, and every one of them have followed the same oversight principle, which is decentralized management. The management of Autotrader have remained unchanged for more than a decade, and this, coupled with the business's single sustainable competitive advantage, its people, is the reason we are the market leader today. While OLX or Naspers have given us the opportunity to insource our technology teams and create local jobs, we as a management team remain in control of operating this business. But Autotrader has had to pivot, even if slightly, a number of times already. From its launch in 1992 to the changes that have become more and more frequent as we've had to keep up with the market and the competitive forces, we've had to change a number of times. So moving on to how Autotrader's business actually works. And to articulate this, let me start by describing what our commercial offering looks like in terms of our rate cards. Now, because of time, I have used a typical independent dealer rate card for used car, but the typical principles remain the same across the other channels. Our business sells products to do 2 things mainly. Mostly retail-based classified adverts that get consumers' attention, convert into leads, and help sellers sell cars. And then to help business users build a trusted brand. Autotrader's prices to business users come down to also 2 main basic things. The volume of listings. This incentivizes business users to list all their listings on Autotrader. The value a product delivers versus other products. This is not an exact science, and the listings and users are changing all the time, which means that the metrics are changing all the time. And also bear in mind that every used car in every dealership is unique in its own right on our platform. What I haven't included here, but happy to talk to in Q&A or even in private sessions, is banner advertising. But if you want to, we can get into that a little bit later. So step 1, business. I'm just going to take a sip of water if you don't mind. Business users have to take our standard listing product in order to get onto our platform. This is a monthly subscription based on the number of vehicles listed and differs per region. Then there is a range of what we call VAS, or value-added products. And in no particular order, dealers can subscribe to what we call listing standout, which gives the business user a deeper listing and a carousel of photos on the search results page. A minority of business users take this product. Also, dealers can subscribe for dealer branding. That's the dealer's logo also on the search results page. A minority of users also take this product. Then dealers can subscribe to what we call featured listing, which is a contextual advert appearing in position 0 or position 1, if you'd like to call it that, but it's at the top of the search results page, and it's split into 3 tiles if you go onto the search results page. Each tile contains a different dealer's listing for every contextual search by the consumer. An even lower minority of dealers subscribe to this product. And then last but not least, dealers can subscribe to featured dealer, which is 3 contextual listings side by side from one particular dealer, roughly in position 12 or 13, depending on whether you count the featured listing as a position and whether you count the banner in the middle of the page as a position. But it's clearly marked as featured dealer. An even lower minority of dealers subscribe to this product. And then lastly, moving away from value-added products or services, dealers can upgrade their standard listing package to premium. Their listings will then appear above the standard listings on the search results page. A minority of dealers take this product as well. In addition to all this, we also provide the market with industry, or should I say, provide the industry with free market intelligence reports built from our own anonymized clickstream data, as well as research and studies that we do. You can access, this can be accessed by anybody that goes to reports.autotrader.co.za, and it's free to download. And in the drive for consumer transparency, we've recently launched a free car valuation on the main portal, autotrader.co.za, which can be reached at autotrader.co.za/car-valuation. And as I said, that is in the drive for transparency, which the consumer wants. On the business user side, business users use what our listing capture tool that we refer to as Manage. So the tool's referred to as Manage. So if you hear me refer to a tool called Manage, it's the listings capture tool to get listings onto Autotrader. Roughly 80% of business users use our listings capture tool to get listings onto Autotrader. We also provide data and insights to every user of our Manage tool, and that gives insights into the performance of that dealership's listings. We also monetize data through our live market pricing tool called Fusion. There is a very low single-digit percentage uptake of this particular tool at the moment. Autotrader, however, doesn't operate in a vacuum. And we have many competitors, some direct, some indirect, and some customers who could become competitors in the future. But as you'll learn a little bit later on, those aren't the main competitive threats. While they are fierce competitive threats, they're not the main competitive threats potentially in the future. So the market is rife with competition. Getting access to listings, getting access to consumer attention is not difficult. Hosting a platform even is not difficult with things like cloud computing today. An internal example of a startup, or should I say an international example of a startup that is now ahead of the previous incumbent in the USA is cargurus.com, who came from nowhere to take the leading position in the US against the incumbent who started in the lead. The difficulty, therefore, isn't access. It isn't getting user experience. It's getting user experience right and changing at the right pace with the consumers and business users' needs at the right time. So let me repeat that. The difficulty, therefore, is not access. It's getting user experience right. But not only getting it right at the right pace for consumers and business users. A balancing act that Autotrader South Africa has worked extremely hard on to bring us to the position that we find ourselves today. In South Africa, cars.co.za is the major vertical platform rival of Autotrader. And the same car shoppers search for cars across both platforms in South Africa. I must point out that this overlap is likely much bigger, but we only have one tool to use, and that is SimilarWeb, to really compare. The difference between Autotrader and cars.co.za, however, is that Autotrader is better at retaining users. More users return to Autotrader than to cars.co.za. And this, I believe, is because of the superior user experience that we've managed to iterate to up to now. Users prefer Autotrader, that's why they keep returning. But it doesn't end with Autotrader and cars. Just under half of Autotrader's total audience visits at least one other direct competitor platform. And when considering the full automotive market, including sites beyond vertical platforms like Autotrader, it's clear that car shoppers, in fact, 88% of car shoppers visit multiple websites in their car shopping journey, such as OEM automotive brands, car dealers. Cars.co.za, as I said, is the main rival. But it wasn't always that way. Cars.co.za wasn't always the main rival of Autotrader. And I'm only going to speak to the digital world for now, because there was an even different rival in the print days. CarFind was. CarFind was one of the first online platforms in the early years, and we thought CarFind was going to be there all along, and we kept a very, very close eye on them. However, from left field came Cars. Took the number 2 spot from CarFind and nearly disrupted Autotrader's number 1 spot. With a growing internet base in South Africa, low-cost only disruptors can come along and disrupt the incumbent. And the complexities, as I said earlier on, of us focusing on moving a print business to a digital business was the thing that was weighing us down. In the print days, we operated, for the most part, at the lower end of the funnel. And we nearly got disrupted by cars.co.za because they began building a brand using content, something that was a foreign concept to Autotrader. We were a pure classifieds business. And they did a great job, and they still do. So Autotrader began its content journey only in 2014. And we're going to get to the funnel a little bit later on, and then some of this will contextually make sense to those viewers that are watching. This was some 5 years after cars.co.za started with their brand building content journey, because up to then we were squarely focused on digital transformation of an existing classifieds only print business. And since the internet, there are a myriad of new entrants. The latest, I only noticed them last week, as a matter of fact, is carfindme.co.za. I'd like to point out that on the bottom right is Automart, our biggest competitor in the print days. And then also point out Autodealer, who is owned by the Caxton Group, one of South Africa's biggest community news companies. They had even deeper pockets than Autotrader and could have trumped our pace of user experience, but they haven't. So in addition to all of this, business users multi-home their listings. Besides consumers multi-homing, if you can call it multi-homing, visit multiple sites, business users multi-home their listings. I think that this number is probably around
Mr. Minnie, I don't know if you can hear us still. You seem to have frozen.
Just on that Mercedes-Benz C-Class, that 2 out of those 3
Mr.
listings.
Minnie, you froze for a moment there. Do you want to take us just back to the beginning of your discussion of this slide?
Sure, no problem. All right, I'll start there. Can you hear me now, Mr. Hodge?
Yes, we can. I think you'd
Yep,
finished this slide. We'd heard that it's the next one you went and froze, so we didn't hear
frozen.
what you had to say.
No problem. So business users multi-home their listings. I think anecdotally that this number is, and from all of the experience over the last 17 years, this number is probably around 80% of listings are on more than one platform. The trouble is, the metadata structures and naming conventions are different across all businesses in the market. We describe dealers differently. We describe listings differently, making matching very, very difficult. And so besides direct and vertical or automotive market competition, there's an even bigger competitive threat looming to Autotrader in the future. And that competitive threat in these companies, which are not South African, if they got their data structures in order, could give all South African verticals a run for their money. Why? They have the consumer's attention every single day. They also, in many instances, like Facebook, know the identity of the user, which makes targeting an in-market car shopper even easier. So while Autotrader has 10 million visits per month, is actively moving up the car shopping funnel through content marketing in order to stave off this threat as far as possible. So we have to agree that Facebook Marketplace and Google pose a massive threat as they move down the funnel towards the transaction itself. Then moving off the competitive landscape, and given that we don't have enough time to get through all of the detail, I've left a lot out as a result of this being a public hearing, as I said in the beginning. And I'm happy to share those in closed sessions, Mr. Hodge and the panel. But I want to give you a flavor for the car shopping journey. And the car shopping journey is very complex. It's not linear. This particular slide, generated by Google, shows 21 touch points in the car shopping journey. 26 touch points, 21 of which are digital, where consumers spend about 38 hours shopping for a car. Now, that's not 38 hours back to back. It's not somebody sitting for an entire weekend, Friday to Monday or Monday to Friday, searching for a car. This is over months of shopping for a car in some instances. And this is Autotrader's study. It's not Google's study, so I don't want you to get confused with the previous slide. They do so across multiple platforms in the physical world as well as the digital world. However, another nuance exists. And this analysis is pre-COVID, which I note is a reference in terms of us going back to pre-COVID times. So I just want to point out that this study is pre-COVID. But attribution isn't easy in a vertical platform, especially a transparent vertical platform. Our studies show, and this is backed by international studies as well across other vertical platforms in the automotive industry, that the majority of car shoppers don't take any action on a platform like Autotrader. They simply visit the dealership, especially if they are very low down the bottom of that funnel or if the car is incredibly unique. And this is important to the remainder of my story, in that car shoppers prefer transparency. And it's something that most platforms or vertical platforms are striving for. Car shoppers also prefer anonymity. It's not a coincidence that 62%, in 2 slides ago, 62% of users in our study make no prior contact through the platform before going to the dealership until they are ready to buy. But in the world of two-sided marketplaces with consumers who want transparency and anonymity, most of our visits come from Google. more than 75% of our visits, in fact, come from Google, either organic or pay-per-click. While the journey from pay-per-click or organic are very similar, I'm going to use organic as an example to describe or give you a flavor of a typical user journey. A user would typically search in Google for a car by make or model or make, model, and variant. Now, I want to point out at this point that there are hundreds of different features on cars, coupled with the makes, models, and variants. So this long tail search gets very long. And make, model, and variant is what we refer to as short tail search. And it's typical of a car shopper slightly higher up in the purchasing funnel. Long tail search, however, is where lower funnel in-market car shoppers are, and is typically identified through longer string keywords, text searches in Google. And in this particular example, contains the suburb perhaps. Autotrader can only get one spot amongst the four, no matter how much we spend. And as you know, Google Ads start at the top of the page and organic underneath that. So I said I was going to be using the organic journey. So by clicking on the organic link that you see here, where Autotrader ranks first organically, Google search is where Autotrader has the most influence over the consumer visiting our platform. After this click, we consistently lose influence over the user journey, and this will become apparent shortly. On this click, the shopper lands on the search results page, what we refer to as the search results page on Autotrader. The listings are ranked by price, high, low, except for the featured listing and featured dealer, which I took you through a little bit earlier on. I'd like to point out here, though, that on this particular example, there are 103 results across 6 pages in this example. You can't see the bottom of the page, but there are 6 pages in this particular example. And this is important because this is a typical example of where on average, unlike in Google, the number of pages per visit is very low. But then a strange thing begins to occur. Shoppers begin to filter, and Autotrader loses even more influence over the shopper journey as a result of the uniqueness of the car, the uniqueness of the dealership, and the consumer's appetite. And the number of pages presented as the consumer filters gets less and less and falls below the 7.5 average that I showed you in the previous slide. In fact, search filters are used so extensively, on average 97% of the time, and if you remove make, model, 60% of the time, if you remove make, model, and variant. And because business users, the business user is in control of so much on the listing, it causes what we like to refer to as the long tail of CAVs. Now, a consumer advert view, I'm getting to that next, is the next click from the search results page, where the business users, no matter what package they're on, gets value. It just depends on how they present the car, what car it is, what it's priced at, how they present the photographs, how they describe the car. So Autotrader loses even more influence over the car shopper, and the influence now shifts towards the business user. The car shopper then clicks on and executes a lead via the contact form on the right-hand side of the CAV, or the consumer advert view, or the advert view, whichever you'd like to refer to it as. Internationally, they refer to it as the VDP, or the full page ad. So those are all synonymous. But remember a couple of slides ago, pre-COVID, 62% of users do not take that action. And I'd also like to point out that the majority of contacts in the COVID era now is phone calls, whereas it wasn't as high as a percentage pre-COVID. These actions are taken roughly 500,000 times a month, and a very small number of visits on Autotrader convert at this level. As you can see, roughly about 2%. And this is where the journey ends in my slide presentation, because after this, the lead bucket becomes really, really leaky. We don't follow the consumer to the sale of the vehicle. So I'm going to move on and consider some strategic areas. And that firstly, the reality is that no matter how successful a platform is, we have to continue to battle for the attention of the consumer. There's no sitting back and coasting. We need to be the best of the best all the time in those pillars that you see on the screen, which is we need all the listings, or as many of them as we can get. We need to ensure the best quality on our platform. Remember, a lot of that influence and a lot of that quality comes from the business user. We need to have quality search and quality user experience, and we need to create trust so that the buying consumer trusts the listings on the platform. And these are the things we have to focus on to attract the attention of the consumer in order to stay relevant, because the consumer votes with their click from Google. Other strategic considerations of a platform like Autotrader is the fact that barriers to entry are now low in the online world. The playing field is also level with the internet. And we face bigger competitive forces like Facebook Marketplace. So in closing, we don't design cars in South Africa. In fact, we just assemble them. But that assembly means tens of thousands of jobs and foreign currency inflow into the country. South Africa faces a real risk becoming another Australia by importing all our cars instead of manufacturing them locally, because we may not be moving quick enough. It seems like we're gaining some momentum, but if you asked me this question 2 years ago, I would have said we're not moving fast enough. Why is that relevant? Because similar to that risk, in today's world of the global internet, Autotrader is the little guy. So if Autotrader's ability to grow is slowed, we would be opening a door to importing Google and Facebook. Thank you, and happy to take any questions now from the panel.
Thanks, Mr. Meany. I admit I'm a bit out of breath. It was quite a rapid tour through. But thank you for that. I may not have got everything right, but we can go back to that. I just want to start with something a bit different. I mean, Property 24 yesterday ended off with their concluding slide with their triple B double E score. I just want to know what Autotraders is.
So we ended on a level 6 to my knowledge, and we're striving to get to a level 5.
All right, because Property 24 was a level 7, so a little worse than you. But I just want to understand, I mean, in the South African context, level 6, not very good, is it?
Well, that's why we're striving for level 5 and above to progressively improve the score.
And have you always been at a level 6?
No, we were actually non-compliant for a while.
Until when?
Until this particular round.
Sorry, until this year?
Yeah, till this year, till this particular round.
All right, so
yes.
You were non-compliant.
Yes.
I mean, is this a focus, maybe, Mr. Nicklin, for the OLX group?
Absolutely, it is. And that's one of the reasons that we're now making progress on this.
I mean, it's come late, but I suppose let's at least see if you can move that forward. Because I think...
Sorry, Mr. Hodge, I just checked while you were talking to Mr. Nicklin. We actually reached level 5. My apologies. We actually reached level 5. We were on the cusp of level 6 and 5, and we actually moved over to level 5.
Thank you. And I suppose cars also has a reputation for being a male world. I mean, what is the kind of gender representation within Autotrader?
You'd be surprised to find out that the gender representation is actually very skewed towards previously disadvantaged individuals as well as female in Autotrader.
Well, that's encouraging, certainly. Can I just ask, on this journey when OLX came into the picture?
I can maybe speak to that, yes. We finalized the acquisition of Autotrader in the second half of 2017.
All right, so well into the digital journey.
Absolutely. One of our observations at that point in time was that the Autotrader brand had a fantastic following. We saw commercial opportunity. We realized, though, that the product, the technology that Autotrader was using was below what we thought it should be. And that aligned very well with our strengths. And hence we acquired Autotrader and have subsequently invested in its platform. And I think it's improved significantly.
So I think we had, partly this discussion yesterday with around Property 24, but what you've brought really is technology more than funding in this case.
I would say so, yes. When we acquired Autotrader, it was profitable. And therefore, again, our contribution has here been mostly on the technology side.
Not capital injection.
Correct.
Mr. Middy, as you're the first person coming from the sort of auto side, can we just understand a bit of the dealership landscape in the country? Maybe if you can sort of at least indicate we see some large groups, think mini groups, individual dealers. So just give us a sense of the landscape in the country.
Sure. I'm going to talk to this from what I believe over the last decade and a half. So just to kind of qualify the fact that it is very, very difficult to count the number of dealerships in the country. We've tried this a number of times, and so we get to a particular number, and we're happy with that, but it's very difficult to count the number of dealerships. We believe there are somewhere between 1,800 dealers, maybe up to about 2,000 used car dealerships in South Africa. And that is made up of group dealerships. Now, bearing in mind that OEMs, original equipment manufacturers, that assemble cars or import cars do not, by and large, there are some examples, but do not, by and large, own dealerships. Dealership groups own dealerships. So there are a couple of dealership groups, and those dealership groups make up roughly, which contain mostly franchise dealerships, make up roughly about 20% of the dealer base. The rest is made up of independent dealers, which is either one-man show or a small dealer group, what we refer to as a mini group. And there's dealerships ranging in size from anywhere from down to 10 listings all the way up to hundreds of listings. If you put the dealers together within a group, you get to thousands of listings. But there's very few single dealerships that have thousands of listings.
And just can you just give us some examples of the sort of group dealerships and then the mini groups, just so I think ourselves and the public can sort of associate it with brands we see?
You want actual names?
Correct, yes.
Okay. So an example of a dealership group would be Safal, would be Bala World, would be, so those examples of big dealer groups, Super Group, and then mini groups would be the Safi Group, Gijs Pizza. I'm trying to just grab dealers out of the top of my head, so excuse me.
No, that's fine.
Yeah.
I think we got a bit of a sense, and I suppose the group dealerships, if I understand, are often linked with the OEMs, as I think you put it. So they've got the new car sales, but they also do the used cars through that, obviously, as trade-ins and the like.
Correct. Mini groups also have franchise agreements with OEMs. So it's not only the big groups that have franchise agreements.
And just some of the, I suppose, the dealership economics on used cars and selling of used cars. I mean, obviously they would purchase or get a trade-in wherever they source it from at a certain price. They may add their markup and may even have costs in order to fix up. So, I mean, what are we looking at in terms of the kind of margins in between the cheap cars and the more expensive cars on used rather than new?
From my experience, there is a concept called first gross and a concept called second gross, and then a concept called value-added products. So if I can bucket it in those three areas for now. First gross is the margin on the what's referred to as the front end of the car. So it's the actual profit margin on the cost of the car itself. Typically, from what I've seen, those margins range anywhere from, on average, 8 to 12%. Can be north of that, depending on the demand for the particular make, model, and variant. If there's very low demand and high supply, that margin does plummet. Classic economic model. So that's the first gross front end. So typically, you could use the maths in terms of an average car is in the region of 300,000 Rand. The first gross would bring them about 30,000 Rand if you use 10% in the mid-range. Second gross is the margin the dealer makes on the finance of the vehicle. So they get a what's called a DIC on the finance of the vehicle. Typically, that DIC in a lot of instances almost matches the first gross in terms of quantum. So different dealerships have different DICs, so it's a difficult one to talk to because it depends on how much business that particular dealer puts through the bank. So also in my experience, not all cars are financed. I would guess in today's world, probably 50% to maybe even 2/3 of cars are financed, which if you use the lower end of 50% and you use the same margin, you're getting another 15,000 Rand in profit in my mathematical example, which takes you to about 45. And then dealers sell value-added products or value-added services, and those range from insurance-type products to scratch and dent, tire insurance, motor warranties, on which that world is quite complex in that it's sometimes a single payment and sometimes recurring revenue from the insurance provider to that dealership, depending on the deal that they have. Hope that answers your question.
No, that does. And obviously, I suppose if these are percentage, depends on the value of the car. But again, as you say, supply demand. And presumably they would have a range of costs, advertising, obviously, salespeople, rental, whatever, to do all that. I just want to understand as well, almost the landscape from the perspective of historically disadvantaged individuals in auto. The Commission has recently put out guidelines around service, repair and maintenance, I think, as you're aware, which were almost necessitated by the fact that it seemed that previously disadvantaged, and this is, I suppose, service, not necessarily just used, but they often go together, were generally quite excluded from the networks of OEMs, of insurance companies. So it had a consumer angle as well, obviously, the right of choice. So, I mean, from that, our impression is that at least the big dealerships and the sort of high volume locations are not frequented by historically disadvantaged individuals. It's more of a marginalization. But let me ask you what your impression is as someone who's been in this industry.
So like most other things in South Africa, I think the transformation journey is important, and I can't speak to exact numbers because our focus up to now has been to try and become BEE compliant. So I can't speak to the actual ownership structure of dealerships. This is not something we've delved into. However, I can see that transformation is something that is important to this industry, or should be important to this industry as well.
I mean, from that, I understand then, or I would interpret that it's not been something that's, I suppose, and I'm not saying you're not the dealership, but it hasn't occurred at a substantial pace. Would that be a fair?
Well, I mean, I can't confirm or deny that, Mr. Hodge. You've got to also bear in mind that the dealership network, 80% of them are very fragmented and single owner businesses. So I think. If anything, that's what I see is a very fragmented dealership market, which might play into some of the difficulty that you speak of.
All right, because we had numbers for property, and this is obviously not property, but our impression is it's not necessarily much better. But let me leave that there. If you don't have any more information for us, I just wanted to go to sort of your business as well. I mean, you mentioned that 75% of journeys start on Google.
Yep.
So I presume marketing on Google is important for you.
Yes, marketing on Google is important for us, but equally organically ranking on Google is important for us.
No, I'm
and
sure,
maybe even more important.
All right, and you probably, also do some brand advertising as well.
Yes, we do.
I mean, can I get a sense between staff and marketing, what your biggest costs are as a business? I don't want you to give me exact numbers because it's a confidential session, but I'm just looking for kind of orders of magnitude.
Across most business vertical platforms, the three main costs are people, marketing, and IT OPEX. Those are the three biggest costs. And depending on the strategy of the business and the way it sees the future, the spend in one of those three categories, or the three of them, could change. And I'll give you an example. You can often supplement the lack of automation in technology with people, using operational processes to supplement technology and automation. So I would say, I mean, I know it's a classical answer, but the quantum and the magnitude of those three really depends on where the business is.
All right, but
I'm happy to get into the detail of what those numbers are in a confidential session. So.
No, certainly, and this is a public session, so I think it's more for obviously us and the public to understand these businesses, because that's, I think, part of the process of an inquiry is also to educate the public around the online economy.
And if I might add, that's one of my passions as well, because skill in South Africa is an important thing, and I think that it's important that the public learn as much as possible. So Autotrader as a business pushing the boundaries of teaching the industry, teaching the public, is something that I'm personally passionate about.
Thanks, Mr. Minnie. I'm glad. So I just want to confirm that, I mean, marketing is one of your big spends, and so it's not just about user experience. It's obviously when the user arrives at your site, you want them to have a good experience. That's important, otherwise they'll go somewhere else. But getting them there in the first place is also marketing.
Yes. However, efficiency of your marketing spend will be counted, or should I say judged, by whether a user returns or not. So you could end up escalating the marketing spend of a business like ours in infinitum, and then that becomes the sole thing that your business spins around. Whereas in our business, that's not our sole focus. Our focus is to deliver a superior user experience, so that when we spend those marketing rands, it works for us in ways that are far beyond that marketing spend, because we don't want to have to spend more than we have to on marketing.
Yeah, and that's, I mean, my understanding would be you have to get both right. You can't spend millions to get people to a sort of poor site where they don't stay and don't return. But similarly, if 75% of journeys start on Google, you've also got to spend in marketing. You can't just get the user experience right, and that was the only thing I was trying to understand.
No, I think that's a fair assumption. But I think the trust that you build in the returning visitor, even if it's from Google, is an important thing.
We had a long discussion with Google as well in the first week, and you may or may not have been informed about that. But I suppose what we pointed out to Google is not just about the bid on the one ad, it's your budget that matters. How many searches you appear on, rather than necessarily just, one-on-one beating someone else. So budget, must matter on Google, I would assume.
Pay-per-click has this law of diminishing returns. If you overspend, or should I say, for every rand that you spend, you get less and less as you go up that spend. But in saying that, and obviously, I'm not going to mention the actual number here. Our spend on Google PPC might not be as high as you might assume. Happy to share it with you confidentially.
All right, but budget does impact how frequently you appear in the ad slot, depending on searches. Because if I've run out of budget by 8 in the morning, then I'm not going to appear in an advert.
Yeah, I mean, if you're running out of budget by 8 in the morning, I would question the efficiency of the Google campaign. But yes, by and large, that's true.
Then I just want to go to your pricing and just what you presented. I mean, you have flat monthly fees in different categories of listings. So yesterday we heard from Property 24, and I suppose I'm only associating because it's in the same group and you must obviously meet each other, but they had a different approach. They had a leads approach. And I just want to understand what the difference is in cars that you don't have a leads approach.
Are you asking me why that is?
Yeah, so I mean, I suppose that, there's a different, I suppose, monetization strategy around pricing. You think about these things, and you've chosen your current model over a different one because it's better for you. And I just want to understand why, because you've also got a little click on the contact number. You could do leads approach. So I just want to understand why you've not chosen that.
So I think the reality is really the legacy history of the business. That is one of the main reasons we're a subscription business and not a click-based or a lead-based monetization model. If you think about the print legacy, we would charge we would charge a fee for a dealer for a quarter page, half page, full page, double page in the print days, and by and large, dealers would take those on a regular basis. So in monetizing our digital business as we transformed, we couldn't change everything, and it made most sense for us to disrupt less rather than more. And so I think it's related more to the legacy of the business rather than to the comparison, to Property 24. That's the first thing. The second thing is you will see that we've moved towards a listing type bill, which if you look on those slides that I had up, we've got different tranches of listings, and we charge different prices for different listings. So if anything, the business has moved slightly towards a per listings charge, but by and large is where it is because of its print legacy.
Mr. Hodge, if I can maybe add one perspective there.
Please.
The way we price our products is not a static thing. It's actually a journey that reflects how far a platform has developed. I think JP yesterday in the Property 24 session also spoke about that. In an ideal world, and in a far advanced world, we would charge for our products fully in line with the economics for a dealership. Meaning in an ideal world, we would have sort of a transactional basis where only if a dealership sells initiated through our platform, we would price for that. There are, of course, realities. George refers to legacy. Other realities are the structure of the underlying the underlying industry. Who is paying? Is it a dealership? Is it an individual salesperson? Like all these things influence. And a third influential factor there is what competitors do. For a long part of Autotrader's journey, at least on the digital side, Cars.cosa, I think, was sort of standard setting in how they price. We were the runner-up in that business. And of course, that has put a reference point in the dealership's mind that we're dealing with. So I hope that if we speak in a few years, Autotrader's pricing approach has significantly evolved from where it is today, but it's not just up to us, and that is actually a slow journey.
Thanks, Mr. Nickley. I think that was useful. So almost Cars.co has set the standard in the expectations amongst dealerships, but as you say, it's not static. You could change in future.
Yeah, maybe that's too strong. I think George has a better feel for whether they really set the standards. But it's obvious if you walk into a dealership that is used to a product and is maybe even consuming a product that prices in a certain way, that's the starting point of that conversation. So they definitely have a reference set there. And
Yeah, I
yes,
mean,
to your second point, ideally we evolve the way pricing works.
just on that comment, Mr. Hodge, cars.co's don't set the standard. Their pricing and the other competitors' pricing influences our pricing, the way we think about prices. The standard is set by the business and what we can measure and how much value we add to the particular customer. And I would love nothing more than to be able to charge when the car is sold. That's the utopia, and that's what Sjoerd is referring to. The trouble with the leaky bucket, as I points out in the presentation, is that we're not there. And I think it's something that every vertical business will strive towards.
And I'm glad you mentioned the leaky bucket, because I thought that may be, part of the reason it's a little more difficult that people. I think you had 62% might visit your site, but not contact prior to just arriving, and so it's hard to actually track that lead even through a contact. Whereas I suppose with property, I can't just pitch up at the house and expect to go and view it. Whereas a dealer is a business, so yes. That journey may be slightly different.
Yes, I mean you might. What you're saying is our bucket is leakier.
No, all of this just helps us understand. The other curious thing I had was why Gauteng is charged differently to inland and coastal, and maybe you can enlighten us, because as we have it. I mean, if I'm a dealer at the coast, I'm charged about 40% less. And if I'm inland, I don't know what inland constitutes, but it's 20%. And then Gauteng, as a resident of Gauteng, I'm just interested.
So let me just describe what inland means. And it is all areas outside of the main metropoles. So that could be anywhere in the country. It's not necessarily a particular region. It's just how we've decided to segment the country. Why the prices?
Mr. Just to clarify that, so outside of a coastal metropole, if I'm still coastal, would that be inland or?
Well, we've got a KZN. Okay, which is Durban and its surrounding areas, and then when you move outside of areas like Pietermaritzburg, you start to get to the inland sort of territories, and then similarly with the Cape, you start to move up to the Northern Cape, you start to move into inland, and then in Gauteng, probably just outside of Vanderbijl Park. You would start to get into the inland territory. So it's very loosely defined, but that's how we segmented it. I can get you a more detailed description in a closed session if you like, and actually map out the boundaries. But in saying that, what we did years ago, and we still do it, is we try and compare value to a dealership or to a seller in the different areas that they operate. And the pricing is then, we try and reflect a fair price amongst those particular territories. So that the value is relative to the price. So, Gauteng dealers get a lot more relative value than other dealers in other areas.
I mean, we had this value discussion yesterday. It's a rather cryptic business term. I mean, what do you mean by value here, that Gauteng dealers get more value?
Glad you asked that question, because value definition in Autotrader is how many advert views the particular dealership gets. Now, you've got to caveat that, however, with some dealerships will get lower value based on the stock mix and their pricing strategy. So it's a very, very difficult thing to establish. But our definition of value is how many advert views a particular customer gets, and that's because it's because of the leaky bucket. It's also not the perfect value measurement, but it's the best one.
So just help me understand this. It's what, do people at the coast not use Autotrader as much, or what is it?
No. So I think people at the first of all, there are less people at the coast. So the engagement on the platform is lower, and the conversion on the platform then results to a lower number of advert views, which then in turn would result to a lower number of car sales. So as I said, it's not a perfect science because of that leaky bucket and because the dealership is in control of so much of the value that they get. We do our best to try and even that playing field.
I mean, are there not even fewer people inland, in rural areas?
Yes. So, I mean, we don't. So, Mr. Hodge, we don't base it on the population. I'm just making the link in terms of why.
All right. I can't pretend I actually understand it any more. But I mean, are you saying that people at the coast get fewer leads from you, and that's why they pay less? And,
relatively speaking.
And inland, although there's fewer people and fewer cars, they get more leads in at the coast, and therefore they pay a little more.
Yeah, well, that's what our data would show. Yes. So as I said, it's not based on population. It's based on the advert views, and it's our best estimate in terms of value.
All right, I may come back to that once I do get a better appreciation. But you sort of took us through then your listing packages and the different types of add-ons, and you've got a 20 vehicle category. I assume that's 1 to 20, 60 vehicles, that's up to 60, 120, and then you've got a 350 vehicle category. As understood, that used to be 250. Is it changed?
Yes. So that's now 350 vehicles. In terms of the rate card, we did change that.
And what was the reason for the change?
So the dealerships that fitted into the cusp over 250 or slightly under 250 made it really difficult. So we had to create the boundary on the upper end so that we could have dealerships fall into that category of under 350 vehicles. There was too many nuances over that cusp.
All right. And so if we look at that, I mean, there's quite a lot of differentiation, but from our quick calculations, I mean, for a 20 car dealership, you're basically paying just shy of 310 Rand per vehicle, and for 350 vehicles, just shy of 69 Rand, and that's a 4 times difference.
Yeah, I mean, I think that's an accurate assessment. If that's the stock volume of the dealership.
Yeah, obviously, if they have 5 cars, then they're paying probably closer to, I don't know, 1,200, 1,300 Rand per car.
That's if they have 5 cars, and the majority of dealers who have 5 and less cars, which is a very small number in and of itself, are actually part of big groups.
Are these dealers that that list with you, that are small in number?
Yes, so that's from our own data, yes.
I mean, do you not think that's surprising if I'm paying 1,200 Rand per car, that few people would come and list with you?
So, I mean, that's by and large not the biggest part of the business model of a dealership to have under 5 cars. You'll see the drop off in price per listing goes down significantly as you go, from 3, 4, 5 cars and onwards. The cost per listing drops significantly, as you've pointed out. But that being said, based on our calculations a little bit earlier on, even at 1,000 Rand a vehicle, which isn't what we by and large bill, the cost of advertising is not significant in relation to the profits that a dealer makes on a car. They have to really sell one more car to more than make up for the advertising spend.
Yeah, and we heard that yesterday from Property 24 as well. But I just want to understand, sorry, Mr. Mini. I mean, in effect, the profit on a car must be less for a small dealer than a large dealer, because they're paying a lot more for advertising on your platform per vehicle.
That's correct. So what I'd like to do in this particular question, if you don't mind, is and I can't seem to get onto Autotrader here, but if you go onto the face of, or the front of our site, and go onto the search results page, and I don't know if somebody can just share that, would be useful, if you don't mind.
Sorry, Mr. Mini, what is the purpose of this?
I just want to show you what option a dealership has. So if you go onto the search results page, and you go down to the seller type, there is seller type, which is private, private business, private individual, trade, verified private vehicles. The private business category is you can stop sharing the screen, thank you. The private business category is a category of product that starts at 549 Rand per vehicle, and dealerships with low stock volumes are more than welcome to take that product.
So that's 550, which is, still not as good as even 310 if you had 20 vehicles.
Yeah. So, so if you're asking me to comment on that, and the reasons why, is the incentivization, as I pointed out right at the beginning of the presentation, in terms of attracting users. We need to stimulate stock volume on Autotrader, and our pricing structure, by and large, does that.
I mean, I'm going to come to that, but I just want to ask, we got Cars.co.za coming later, but they introduced a category for 5 cars. So they clearly see that there's something out there in that category. So as I said, I think it may be you're not seeing them because of your pricing. But I wanted to ask, above 350, you talked about the large groups. So, I mean, tell us about pricing for those with more than 350.
Sure. So first of all, let me point out that 5-car package of Cars.co.za is 2,000 Rand a month for 5 cars, which, it is, 2,032 Rand for 5 cars. So way above, the thresholds that we're speaking about. So getting to the other part of your question, which is for large groups. So what we've done with large groups is we've moved the business further towards what Sjoerd and I were speaking about a little bit earlier on, and that is, closer to that price that gets us to where the car transaction happens, and the way to get there is to charge per listing initially. So we've moved all of the large groups to a price per listing.
And just to compare to our 310 Rand, what are the kind of numbers we're talking here per listing?
If you wouldn't mind, Mr. Hodge, those are confidential agreements with those dealer groups, so I'm happy to share with you.
I don't need an individual dealer group. I just want a ballpark.
I'm going to get myself into confidential trouble here, but the gap's not as big as you may think.
Well, they've got to do better than 69 Rand per car, because that's what you give the 350 dealer.
No, they certainly don't do better than 69 Rand per car.
They don't?
No.
Because the 350 vehicle dealer is paying 69 Rand for a listing. So if I had 1,000 vehicles, are you going to say I don't do better than that? Surely that doesn't make sense.
I mean, the rate card is what you're seeing, and different dealers take different products and packages, and it's not necessarily purely that a dealership will take that product at 69 Rand a car. We've more than likely sold them other products as well.
Yeah, I'm going to come to the other products, but I just want to know on the standard listing. You're not going to give me a price point for bigger groups?
Not in this session, unfortunately, Mr. Hodge. I'd prefer to keep it confidential.
No, I'm sure you would prefer, and I'm sure you can exert that. I just find it disappointing. I mean, we've had this continually throughout the hearing, that quite frankly, we know the prices must be much better. And frankly, the public should be aware of that. So if it's not much better, why are you not willing to tell us?
Because it's confidential agreements with those dealer groups, and I can show you in a private session that it's not better.
Yeah, that's not going to help the public, and it's not going to help the small dealer paying 310 to know what his rival across the road is paying to advertise on Autotrader. And that's the point of transparency, is transparency brings fairness, because you have to explain it to the small dealer why they're paying 310 and the big Barlow World across the road is paying a lot less than 69 Rand. And they're selling a car and they're going to have the same costs, except advertising, of course.
I don't want to leave the perception that Barlow World is paying under 69 Rand, because they're not. And I also don't want to leave the perception that we're not willing to disclose the information, because we are. And it's certainly not as low as you may think.
Thanks, Mr. Minnie. I mean, you're not willing to tell it to the public. Obviously, you can tell us and bind us to confidentiality, but I think the public deserve to know. But let me move on. You say volume. Now, this is something thrown around all the time. It's volume. I mean, what has astounded me in the last 2 days is it's not the 5 to 10% we sometimes see in retail. I mean, we started preparing guidelines for price discrimination where we had a 5% price difference as a threshold. This is 4 times. That's a 400% difference. I mean, we've never seen these sort of differences. And how does volume justify that extensive difference?
Mr. Hodge, I think you're using the 65 Rand as the de facto kind of price point, which is not the case. What we can share with you is the average price per listing that every dealer in the country pays, and you will see that it's not 65 Rand. And so the differential is not that big. You could look at the rate card and do that maths, but in reality, that's not the case.
And yeah, we're doing the rate card and we're doing the maths, and I'm sure if I had 330 vehicles, I'm paying slightly more because I haven't, it's a flat fee. But the extent of difference is not going to change dramatically. I just want to...
Can I maybe just add one relevant talking point here, is that by taking this view here that you're presenting, or you're comparing again the cost per listing.
Sorry to interrupt. We just lost sound here on our side, so if you can maybe just give us a minute.
Sorry, I don't know who that is.
No, sorry about that, Mr. Hodge. My Wi-Fi dropped for some reason. I didn't get anything that you said.
Well, Mr. Nicklin, you heard. You want to proceed?
Yes, please. Now, I just wanted to add one perspective here. Sorry, two perspectives. One is by continuously focusing on the price per listing, you might actually miss out that, for example, on a price per lead as the closest proxy to value, that differential that you've rightfully observed might not be as significant. And second, I think some of these larger groups, if I follow your line of reasoning, they would see exceptional value. But I think the reality of today is that many of them are not advertising on our platforms or have recently left our platforms. And so that is another, I think, indication that from a dealership perspective, large or small, the concept of cost per listing is not necessarily how they will evaluate our platform.
And sorry, Mr. Mini, I think if you're typing, we can hear that. If you just
sorry about that.
I mean, if this is such a small cost in the overall money made, I mean, don't people bring their listings anyway? I mean, if you're rewarding bring your listings, then the 20 car dealership who only has 20 cars brings all their listings. I mean, why do they still see a poor price if that's what you're trying to do?
Well, I mean, it's... Sorry, go for it, Richard.
No, and I think you're much more better position to answer this. But obviously, a dealership looks at a portfolio of advertising platforms and also makes a relative return calculation. So it's not as if the dealership does not decide to not advertise at all. He might decide that for his or her situation, the marketing investment is with a higher return made elsewhere.
I suppose the reality of auto dealership today is online is the most important probably marketing channel. And if you're big, you get to negotiate and you get a good rate that offers you value. But if you're small, you don't negotiate because you're told what the rate card is and you pay 4 times. That seems to be what we're sitting with in auto. But you mentioned, Mr. Mini, that that's not the only thing people pay for. So I want to come to your other elements. Now, when I come onto an Autotrader search, and maybe I've been directed from Google, my default is the default ranking, is it not? It's not cheapest to... and as I understand, you have that because you're selling visibility. That's the premium listing, the featured listing, well, I suppose those are two of the most that appear at the top.
Yeah, so it's standard. On top of that, premium, the listing right at the top featured. In the middle of those listings, either in standard or in premium, it's irrelevant, is featured dealer. So that's kind of loosely the SERP page.
And as I sort of see from your site, the featured listing is a sort of 3, and there's fewer pictures. The premium listing is a big one with lots of pictures. Is that right? And then obviously you've got the add-ons like branding, standout, where standouts more pictures as well, and dealer branding is your logo.
Yes.
I mean, maybe with just picking up some of these, the standout, you said the minority of users. I assume you meant dealers.
Yes, sorry, if I said users, I meant business users.
I mean, what about listings? Because there's a difference between a group with 1,000 listings and a small dealer with 5. So, I mean, is it still a minority of actual listings?
Yes, it would be by definition, because 80% of the market is independent.
Yeah, but I have 5, and the 20% dealerships probably have the vast majority of actual listings.
They've only got 20% of the listings or less. When I talk about the 80-20, I talk about listings. I don't talk about dealerships.
So you telling me that standout is what percent? Well, you tell me what percent of your listings.
Again, I'm going to claim confidentiality, but it's under 50%, Mr. Hodge.
All right, just under 50, or is it? Where does it lie in that range?
I'd prefer to go to a confidential session on this, if you don't mind.
All right, but it's not under 10%.
There is one product in that list that is under 10%, or should I say just over 10%, and that is featured listing, I think. So let me just get there, if you don't mind.
Yeah, I mean, I got the sense too that is not the most popular, but
sorry, featured dealer, my bad. Featured dealer. Featured listing is not much higher than that. So if that gives you a flavor, but I'd prefer not to talk to these actual numbers.
All right, but I mean, I think your answer gives us a sense. It's not under 10. It's under 50. So it may be a minority of business users, but it's a much bigger portion of actual listings. And I assume that's because the bigger groups take this product as part of a package. Is that right?
Not always. So we don't. Not all dealer groups are on premium.
No, I mean, I'm not asking if all of them are. I'm just asking if that bigger groups who get better pricing are more likely to get onto this package. Because we've got
as a matter of fact, not Mr. Hodge. We actually, our sales teams have to do an even more difficult job to convince a dealer group of the value of premium listings versus a dealership, and it goes back down to the competitive nature of the dealerships themselves. The dealer group has the luxury of volume, which means that they don't necessarily have to take premium listings.
I suppose, Mr. Minnie, all I'd put to you is that if it's a minority of users, but a far more substantial share of actual listings, then it must be that it's bigger groups. It doesn't have to be the biggest group, or those with more listings that tend to get this, because it follows from the maths.
So it's not true. The listings are not dominated by dealer groups in terms of premium.
Mr. Minnie, I put it to you, it follows logically. You can deny it, it's fine. Let's just go to dealer branding. I mean, this apparently delivers up to 40% more consumer advert views, according to your promotional pamphlets and your slide deck. So this is one of the also better products in a sense, if it delivers 40% more.
Sorry, Mr. Hodge, you broke up there, but I'm assuming you're talking about
I was talking about dealer branding, yes. And I was just saying that this apparently delivers 40% more consumer advert views.
Yes, so our maths has gotten that number out of dealer branding.
I mean, when I search your site, I tend to see a lot of dealer branding. I can't say Even this morning I saw anyone without. I mean, is this also popular because you get 40% more views?
Yes, it is. It is as popular as premium.
I mean, is this more than 50% or is this under 50%?
The 50.
Sorry, I think you broke up there.
It's under 50.
I suppose the other thing we notice with all of these products is again the 4 times difference that applies to the standard listing. So it's similarly differentiated by the number of cars you have for sale. I presume if I'm a large group, I also have a sort of personal negotiation with you to see what value you can provide me.
So we do have discussions with dealer groups around price per listing, and that's the way we price the dealer group in the business. I'm not sure if that's a question, or you're asking me to confirm.
Yeah, I'm just asking you to confirm that you would negotiate with them because they're not on the rate card. So they have a negotiable rate, and I presume they'd want to do better than the rate card.
Yes and no. It depends on the need of that dealer group, the stock mix they carry,
Sorry,
the
Mr.
location.
Meany, I'm just going to interrupt you. It's not yes or no whether you take branded listing. I mean, I can understand that. But presumably, if I have 1,000 cars, I want to do better than the 350 when I come for a negotiation. That's all I want an answer to.
Mr. Hodge, if you're referring to the 65 Rand, the answer is no.
With branded listings, not 65 Rand, it's 14 Rand, but that's all I wanted to ask. I mean, I would find it amazing in your volume-based approach that if I had 1,000 vehicles, I'd do worse than someone with 350. That doesn't, that's turning it on its head.
Mr. Hodge, can I maybe add one minor point here? Because your frequent references to the observed differential in pricing, I think is undeniably there. However, it's very important to understand that yesterday and today we're talking about classifieds businesses. You just made a reference to pricing differential in e-commerce being smaller. And the fundamental reason for that is that the additional value that a new listing brings in a market of classifieds, or let's say in a market of used goods, is much higher to that network than an additional, let's say, SKU in an e-commerce marketplace would bring. So that's why you will observe, and that's why there's a strong logic for these price differentials to be different across these two quite different sort of industries, because the additional value that an additional listing brings to the entirety of a classifieds platform is significantly higher than an additional product brings with a deep SKU level where there's multiple elements of that product available, like in an e-commerce setting. I just wanted to point it out that there is sort of a logic based on the types of goods that are being traded on these platforms.
Thank you, Mr. Nicholin, and I'm sure I'll take that up with Mr. Reid on that. But I think, as you pointed out, there's no different pricing on e-commerce. There's no different pricing on travel accommodation. I mean, from what I can see on travel accommodation, there's sort of, 25,000 places. So fewer than the cars you've got for sale, but a hotel group that brings more bedrooms doesn't get a better rate.
But I wasn't so much referring to the pricing. My suggestion was that the additional value that an additional listing brings is different across these different types of platforms and much higher in the case of classifieds and used goods.
And I suppose, Mr. Nicklin, the point I made earlier, if this is so cheap compared to the revenue you get from selling a car, I mean, we heard 45,000. It's so cheap, you know, those listings will come anyway. But the reality is, if I'm big, I get to negotiate, and if I'm small, I don't. And the kind of differences we're seeing here, I don't think you can justify on your value-based model. I'll be frank. I mean, it is astounding. 4 times and probably greater if we actually got into the public domain, what the big groups pay. I mean, that is phenomenally different.
So, you know, without breaching confidentiality, Mr. Hodge, there are some dealer groups that are paying north of 500 Rand a listing.
All right, Mr. Mini, back to that, which is premium listing seems to be your crown jewel, because on what you say, it's 4 times more consumer adverts, and not a 40% or 20%. This is 4 times more. That's that really nice spot, is it not?
Well, it's the chunk of listings on top of standard, yes.
So I assume this is also in your popular category.
Yes, but also doesn't breach 50%.
But also in the 4 times difference pricing, and those with groups get to negotiate.
Yes, you will notice on the rate card, however, that premium listing is double the price of standard listings.
No, I noticed that it was, as you say, it's the same as almost you added on top the same amount.
Yes. So the same logic would follow in the group negotiation.
So I just want to come back to this. I mean, obviously promoting your ranking, if you're premium or if you're, so I mean, we've got featured and premium. We've got the standout and branding, which also add. But on your mathematics, they're more likely to get more views. Presumably that results in more leads and more value for the customer, and that's why they buy them.
That's correct.
I mean, I mean, as I understand, you know, maybe this is the Google effect, but certainly a minority of consumers would flip to the second page or the third page, or is it that they refine their search?
The latter. So the refinement is a big consideration, almost like a consumer going back to Google and increasing the text string in their search.
All right. I mean, maybe just to finish up on this, do we not have a compounding of the problem that we identified with standard listing? I mean, you charge a lot more for a small dealer on a standard listing. They're also discriminated against on all the advertising, which does affect the consumer choice and does generate leads. And so if they are to pursue that, they're going to, in effect, again, have to pay substantially more, which means there's probably less value for them, which probably means that fewer and fewer of them are actually going to be affording the advertising, which is so critical on your platform as well.
I don't think that's the case, Mr. Hodge, and the reason is because the advertising cost, even with all our products, is and I'll point out again that a dealer more than covers their advertising cost by selling one more car. So the economics around profitability versus our cost to a dealership is small. Dealerships have much bigger costs in their cost base than Autotrader. So I think that's the first thing. And then in terms of getting value, because the used cars are very unique, they're not commoditized products on Autotrader. The user and it's one of the reasons the user filters as much as they do. The user filters to extreme amounts, and that's because of the uniqueness of the used car. They will find what they're looking for. Doesn't mean the product doesn't work. It does. It does give more value on the premium package to the standard package, but a dealer does get a significant amount of value even on the standard package.
I mean, all I'm putting to you is you're the leading portal, as I understand, in auto. A lot of consumers look for cars online, so a lot of the leads are coming this way. You're charging then substantially different. So whatever the economics for the dealer is, the small dealer is materially worse off because they're paying 4 times more for advertising your site, just a standard listing, and that may leave them with less money to actually promote on your site, which seems quite important, and which appears to be used, I would say, a lot more by larger dealerships because you have less than 50% of listings, but a minority of dealers. So, I mean, I'm just trying to understand how this isn't exclusionary. You've got to be on your site, you've got to advertise, and you're charging someone so much more. I just don't understand why this is not a problem.
Dealerships have alternatives. They have cars.coza. They have many other alternatives. They don't have to be on Autotrader. They choose to be on Autotrader, and the price difference is based on volume discounting. Doesn't seem to be prohibitive to them advertising, which then tells me that they are free to choose. They're not forced.
I mean, a market inquiry, I think, as I explained yesterday, is not just about dominance. It's about a market and the features. And obviously we have Carfind Next and Cars.co's in the afternoon. I'm not saying they're any better, but it may be a market feature that has the effect of discriminating quite severely against small business. And I think, as you indicated, in this case, it might also, as a result, be severely discriminating against historically disadvantaged individuals. I mean, I think we heard in property, and it's probably the same in auto dealerships, certainly from what we've seen, that because people were discriminated against and excluded from this sort of economic activity, they're more likely to be a new entrant, a small entrant trying to build, not an established one. And I think as that one agent, through what I read to Mr. Farina, sort of put quite well, is, without the capital, the benefits of privilege, historic and current. So this, if there are benefits to the digital economy, benefits from being more efficient in advertising, reaching more consumers, finding more buyers that might, give a better price for a vehicle because you're reaching people who want it, then those benefits are going to be denied. And it's a question of fairness. It's not whether a person's going to earn slightly more than they are, going to make a commission on this. It's about the fairness of why should someone who's so big pay so much less. I mean, doesn't this completely entrench the structure of the economy? I mean, a big dealer gets lower costs on everything, can make more profit, has the benefits of privilege, and then can expand as a result. And the small dealer, every bit of value is sucked out. So, that's what I'm putting to you. It's not about whether that dealer makes it worthwhile on Autotrader or not.
I don't think, from my perspective, I don't think that leveraging those economies are discriminatory for a big dealer group, and our pricing is purely based on getting all the listings onto the platform.
I just got a couple more questions, Mr. Minnie. I mean, when you go and do a deal with a large group, I mean, do they sign up for a period of time? Sorry, I think we have Carfind who's joined us virtually. Maybe you want to just put off your camera while we finish up with Autotrader. Thank you.
Maybe before you answer, George, let me just interject for 1 second on this point. In the end of the day, it is also to the platform, hence our benefit, to have as much content on the platform as possible. And I think George pointed it out earlier, JP pointed it out yesterday, that is the fundamental, the fundamentals of classifieds, the fundamentals of used good marketplaces. So will we invest and will we aim to have everyone on board going forward? Yes. Have we been investing in that? Yes. But I think it's dangerous to harp on the 4x number that you mentioned here. As I mentioned, you should take a more balanced view here in terms of value delivery. There's tons of examples of large groups that are not seeing the benefits in our platform. There's tons of examples of smaller dealerships that are on our platform. And so this is not a static assessment of it's only good for the top and for the large ones and not for the small ones. I think we will every day go to work and try to get everybody on our platform. And I think the bigger point taken here is that yes, the current product and pricing structure needs to evolve to make it more attractive. That is in our benefit and in the market's benefit. So we will, and I think there's examples in the market, including our colleagues who just joined, that have managed to build a product that signs up more of the smaller dealerships. And I think as a matter of competition, we will also pursue those dealerships to be on our platform.
Yeah, I don't think with this pricing structure, and the question of fairness, Mr. Nicklin, is if you can bring someone on at 69 Rand, why are you charging someone else 310 Rand? You know, that's the economics of it as well. And you're charging them because they're small, they need to be on your platform, and so you found that pain point that you can apply. And that seems to be the reality. So
I'll let George answer the initial question, but unfortunately, not everybody believes that they need to be on our platform, as evidenced. And as a more of a reconciliatory remark, yes, our pricing structure needs work. As I mentioned, this is a continuously evolving part, and I think it needs to be better for smaller dealerships.
And for transformation, I mean, George spoke to earlier the need for this industry to transform. I mean, we're now 27 years into democracy, and we're just reinforcing the same model and privilege. Big players get better prices, they get to grow because they make more profit, they can price lower because they get better prices, so they can get more sales. I mean, it's just a vicious cycle, basically, and structure can't change with this extent of discrimination. It just can't. And it's not, quite frankly, fair. You know, you have many challenges as a small business. We know there's high exit rates, but to lump this on top just is one more hurdle. So we look forward to Mr. Nicklin engaging on how your pricing must change. But I just had the last two questions that I wanted an answer for, which was, if I go do a deal with a big group, I mean, is this for a period of time that you lock it in with them, or is this, for a year, or what is it?
No. So all dealerships are free to leave with 30-day notices, including big groups.
But do they sign a one-year deal with the ability to leave on 30 days?
No, they don't sign a 1-year agreement. They sign an evergreen contract.
And in that, then, for the big groups, how does the price change? Because there's no rate card that you put through. Do you renegotiate every year, or do you have a...
Yes, we send them notice of price increases, and they are free to cancel should they not want to take up that price increase. It's built into the contract itself that we will be increasing our prices.
All right. I just want to check with the team whether there's anything else. Mr. Minnie and Mr. Nicklin, I don't think there's... Sorry. Sorry, I was just checking with the technical team. I think that's it from the panel and technical team. I want to thank you for coming to the public hearing, and thank you for putting in the effort to put together the presentation and to engage the panel. And I'm sure we'll have those in-camera sessions, Mr. Minnie, in the new year. And
if I may, Mr. Hodge, I'd just like to thank my team who, in preparing for this, worked tireless hours to try and get the content that you see done, and as well as helping answer all the questions that the Commission has. So we will continue to do that, and thank you for your time.
Yes, and I should thank you. We have asked a lot of some of the players, and I appreciate that your team has put together our information and responded timeously. Hopefully we will have less to ask going forward, but I'm sure there will be some few things that we still need. So we appreciate the ongoing cooperation. It is very, very much appreciated. And Mr. Nicklin, also for your time as the General Manager for the OLX Group to join these 2 sessions. I know your time's valuable, so thank you for that.
No problem. We're looking forward to take this forward.
Thank you, gentlemen. You can leave. I'm going to ask the indulgence of Carfind for a 5-minute break, if we can, before resuming. It's been a few hours, and I think we just need a quick 5-minute break. That's fine.
All right, proceeds.
Hi, good day.
Hello, can you hear us?
Yes, I can hear you, but we can't see you. Yeah, we can see you now.
Perfect. Can you hear us properly?
Your mic seems to be a bit far. We can hear you, but you're not crystal clear. Is there anything you can do?
We're going to try.
We've got load shedding in our environment at the moment, so we can move a bit closer. Is that better?
Is that better?
It's much better. It's much better. Thanks.
Perfect. Thank you.
Yeah. The chairperson, and will be with you in a few minutes.
That's fine. We just wanted to
That's
make
fine,
sure.
yes.
Sorry, we were asked to join 15 minutes before our time. That's why we popped prematurely into the meeting room, so we apologize for that. It was not intended to smash into your meeting room.
Okay, no, that's fine. Yeah,
Perfect,
you can mute your video for a minute now.
It's the virtual equivalent of photo bombing, I think.
We're just going to try and switch out our microphone at the moment because it sounds like it's a bit problematic.
It seems fine. I think it's just a bit of background noise, passing traffic.
Yeah, unfortunately, we've got the generator running, so yeah, we're in the midst of load shedding, so apologies for that.
I didn't know we were put on load shedding yet, so.
Apparently we are.
Sorry, Rian and Melissa, I just want to get your designations right so I can introduce you properly.
Sure, my name Rian van Jaarsveld, and I'm the Process and Compliance Manager for CarFind.
And I'm Melissa Viljoen, the General Manager for CarFind.co.za.
Great, thanks. We're going to go live in a couple of minutes and then I'll just introduce you. I believe you don't have a presentation.
No,
But
we don't have. We'll position that up front, and then we thought we'll spare you from all the PowerPoint that you've been exposed to, and then we will have it as we'll position the business and then have it open for discussion thereafter.
Great, that works for us. And we're just going to run till 1 at the latest. So I know you're busy people, and that should be enough time.
Perfect.
Thank you.
Welcome back from the break for the morning session. We now have CarFind, which is another car portal, and we have Mr. Rian van Jaarsveld, who's Process and Compliance, and Ms. Melissa Viljoen, who's the General Manager for CarFind. Ms. Viljoen, I don't know if you want to put on your camera and come into the virtual meeting space.
Here we go.
I had observed earlier that the car space seemed to be male dominated, so it's good to see a female general manager.
Oh, one of very few.
I mean, just at the outset to remind you, we're obviously broadcasting this, so don't traverse any confidential information. Or if I ask a question that needs to go to confidential, you can just tell me that we'll deal with it outside of the public hearing session. I believe you have load shedding, so there may be challenges, but we'll deal with that as we progress. So Ms. Viljoen, I don't know if you want to start by just positioning CarFind, a little bit of its history and what it does, and then we'll follow with some questions.
100%. So thank you very much, Mr. Hodge and Ms. Tepe, for allowing us the opportunity, and of course the technical team and the panel to join these public hearings. We're very excited to be here today and to share some of the insights into CarFind. So as you said, there's a couple of things I want to cover just as an intro, starting with a little bit of the history and the overview and the competitive dynamics around this industry and the whole online world, and then some of our website focuses and how we prefer to work and what our philosophy is, then just some of the marketing elements and challenges we face, and then just to move from there, and as you say, we can then go into more of a discussion question type format. I think that'll be great. So if we look at CarFind as a platform, it was actually started in 2000, so really being one of the first online vehicle platforms that existed. It was, I wouldn't say premature, but it was most definitely a starter, and it took many years for the online market and for the internet market to come together and to actually start engaging with these types of platforms. It was really, I would estimate, for the first 10 years, it was only CarFind really and McCarthy, Polakar that played in the space. We then saw a little bit later on that there were other entrants into the market, and as Autotrader stated, around about 2013, they moved from print to online, as print was really the stronghold and the leader in vehicle sales. So CarFind, really what it is a platform where vehicle listings from multiple dealers can be viewed, compared, and direct contact can be made with dealerships from the public, what we call the potential buyers. And CarFind does not in any manner get involved in the sales process, which I think is important. We purely connect buyer to the seller. For Autotrader then entering the market in 2013, and there's since been multiple entrants into the market. I mean, we see close to 100. We can put up a slide, but there's just too many to mention. And the reality is that it's not just from a third-party platform, as we name it or call it, aggregators. It's also the groups, the independent dealerships, and the OEMs all playing in the same space. That does make it very competitive. So just to name a few, obviously, we know the two big ones competing in our space is Autotrader and Cars. We've also got Circle Cars, Automart, and then the OEMs and group websites that vary from We Buy Cars, Motors, Hatfield, McCarthy, etc. So quite a wide playing field there. So just from a website focus point of view, what we really try and achieve, and the philosophy we've always had, was to be a very buyer-centric platform, which means that we put the buyers first. We don't in any way or form manipulate the buyer's search journey. Once they come onto our platform, they can really search using the filter sets that are available, searching for what they want, and then either engaging or not engaging with that specific listing or the dealerships or making contact. Of course, there is, yes, leakage where they would then also go directly to the dealership to engage. So what that also means is that we don't have any premium listings, we don't have any sponsored listings, we don't have any featured listings, which we then believe also makes it a more level playing field for all dealerships that participate on the platform. We do find from time to time, however, that there are some groups and some dealerships that obviously request that because they want to be more prominent, but we just don't go that route. It's not our philosophy and it's not the way we want to work. So from a marketing point of view, I think a person's got to take a couple of steps back, because we know that the marketing and the competitive space has really exploded within this within this realm, because of the number of competitors we find ourselves competing against in this market. So if we go back a good couple of years prior to 2017, the method of advertising was really above the line. So you would have your opportunities to be on billboards, on radio, on television, etc., etc. And yes, as much as the internet played an integral part, the competition on the internet wasn't where it is today. What then happened was in 2017, Google changed their algorithms. So what they did was, so in the past, most of the websites would show up regardless of what you would be searching. But in 2017, they changed their algorithms, which then meant that as an online platform, you had to change up your platform and your technical and your development in terms to actually come to the party where SEO is concerned, which is in search engine optimization, to then get your organic ranking, which we know is extremely important. With that also came the big boom in terms of your AdWords. Now, I think we all know that the AdWords, it's almost like the AdWords war out there at the moment in the automotive space. I joined a Google conference, it was pre-COVID, so I'd say about 3 years ago, where automotive was placed as the second biggest Google spend in South Africa after insurance. And it is very possible, and I don't have the facts, that we are now number one in the automotive space. So it is really a bidding war, and you do have to spend a substantial amount of money on Google to rank and to get audience in. We know that from an audience point of view, most of the buyer journey starts online, up to 90% it's sitting on now. And yes, we know that the buyer journey can take up to 3 months, but that is where their search journey starts. And as they go down the funnel, the search becomes more and more refined and more detailed in terms of what they want. So the number of areas you've got to play in within the Google search space is quite vast, which then obviously contributes heavily to the marketing spend you've got to contribute. So there has been quite a shift from spending above the line to actual spend on Google. We took the decision around 2017 to actually move away then from radio, which was for 10 years our above the line preferred platform to spend on, so that we could actually afford and play in the Google space. With then what we also see happened at the exact same time in 2017 was then the acquisition of Naspers of Autotrader, which then obviously also is a media owner, and that opens opportunities for above the line again. And how exactly that plays out, I can't tell you and I can't confirm, but yes, I know the market is very pressed and we have to be on Google to play with, if I can put it that way. So from a marketing budget point of view, it wasn't just the platforms that really felt the pressure and the constraints. It's also your dealer groups and your independent dealers that also experienced the same, because they also had to become innovative and start investing in different areas, as well as social coming up quite strong at the moment. And where they used to really subscribe to 5 to even 7 platforms in our space, it very quickly in the last 3 years went down to maybe 2 to 3 platforms. And with COVID, unfortunately, playing such a big part last year, they went down to possibly only 2, because they then also have to invest in their own websites. As we mentioned earlier, that also plays a part. So it puts a lot of pressure on the smaller platforms. I know that we third, we're not the smallest, but we most definitely not the top 2. So it puts a lot of pressure. We do get cancellations. And one of the big things that the groups look at, which I understand when they're making these decisions, is they have to look at lead volumes and cost per sale, if you can put it that way. And when a platform is generating the type of traffic that they are, there is a general spillover to the number of leads they can provide that then obviously equates to sales. What we've had to do also in the recent years is to then really look at our pricing structure. And if you look back at our increases, our rate increases, we had our one increase in 2016 of 8%. We then held back and we had a rate increase again in 2019 of 5.5%. And we haven't since, because we've really got to be conscious now of what the groups are able to afford and what we need to do to compete with the bigger platforms in this space. So we always talk about the 4 pillars that's necessary to have a successful website. And those 4 pillars are really your audience, your leads, and your dealerships and your stock. And without the one, you can't have the other. So it's a little bit of a chicken and egg. When it then also comes to that, so during COVID times, it was unfortunate that some of the groups had to cancel platforms due to marketing constraints. And obviously, going down to 2, we did feel quite a knock in terms of groups that had to depart from Carfine to be able to stay on with other aggregators or platforms. Another element that played quite a is we months notice on our platform. So if you subscribe, regardless of whether you're a group or not, you can give us a calendar month's notice. And we also felt even during COVID times, there were instances where we didn't even enforce that because we did feel that we have to come to the party and assist the groups during that process. Where we now find ourselves is we relaunched Carfine very recently. When we did our submission, we hadn't relaunched yet. We just relaunched at the end of September. The biggest reason for our relaunch and the redevelopment of our website was really around the organic search, which is then obviously very strongly linked to your site engine optimization, which is very, very important. And that is an area where we fell, I wouldn't say we fell behind, we stayed where we were and the competitors grew in that space because of the technical support they had. So that's one of the reasons we mainly did that, but also to hugely improve again the buyer experience and the UX as they come onto the site and they do their search. So I just quickly want to go here. I've spoken about the agreements and I've spoken about our fee structure. I want to speak about that a little bit more. From a billing point of view, we've got a very basic and a very simple billing or rate card structure, which I do think you've got sight of from our submission. So we've got a standard rate for all dealerships, and that standard rate will give a dealership, a normal size dealership, up to 100 listings. And we've got a smaller package, which we then call a satellite or an intro package. And that is really, really designed to help and assist the really, really small dealers that only have listings up to 20. We find that there are a lot of them that's coming into the market, a lot of them that's really struggled over this time, and we feel that that is something we need to do. Other than that, we don't differentiate between dealerships. Everybody is on a level playing field. And because we don't have premium, featured, etc. listings, there's no additional products you can take to really get your listings to a different level or stand out more on the platform. I think that's really, where we're at, and that's where we find ourselves. And Rian, I don't know if there's anything at this point that you feel you'd like to add.
No, I think just to add on to the last point Melissa made, the way we structured these deals, or packages rather, is that we don't charge for additional services, and that's really because we feel that it's up to the user and how the user search for a vehicle to go through that journey, other than us pushing certain listings to them as a promotional option. So yeah, I think Melissa's covered a lot of the detail and the setup of CarFind, and we'll be happy to take any further questions from the panel.
Thank you very much, Ms. Viljoen and Mr. van Jaarsveld. I mean, maybe just to pick up on the last point, I mean, I understand you have sort of promotional banners, more classic advertising. It's just you don't have listing, premium listings or anything that influence ranking.
Yes, that's 100% correct. We do have banner advertising. We see that as individual, obviously banners and promotions that certain dealerships run, or an OEM could even run. We then also have a specials page where we list all of that. So I think we do actually highlight the fact that you can have a look at all the specials, but on the listings, there's absolutely no premium or featured listings.
All right, great. I just want to go, I suppose, back to your history. So, I mean, I also heard this morning, and I didn't realize you were the first. But we've also heard in the last 2 days, I suppose, that internet penetration really took off around 2010. I assume that's kind of the mobile smartphone revolution that has happened. So being early on a market that maybe wasn't quite ready, I mean, did that have any advantages for you from your perspective compared to those who came in slightly later than you?
I think it's fair to say from a brand recognition point of view that we did have an advantage there. We are also a household name from an online platform point of view, but there are also other players in the market that built up quite a big brand in terms of some of the other activities they had, like print. But yes, I mean, I think it's fair to say that from a brand recognition point of view, we did have an advantage, yes.
And just to add to that, I think the previous speakers said a similar thing, is that it was easy to come into this market. So at the time, and Melissa alluded, pre-2017, it was fairly easy to build an online platform and to market yourself out in the environment and become part of this competitive environment. So there was not many barriers to entry. We were first dressed, like Melissa said, with some innovative campaigns with the upside down billboards. CarFind became very well known as an online aggregator and portal, really. But other than that, I think that would be the only advantage, really.
And maybe just to pick on that point, I mean, you've mentioned, Ms. Viljoen, that there's a lot of competition around Google AdWords. I would assume that would push the price up in the bidding auction. I mean, has that happened? I mean, can you give us a sense of how that's changed?
Pre-2017, there was almost no need for Google AdWords. You could purely rely on your website. And when the big algorithm change came with Google in terms of the SEO ranking, that's really where AdWords came in very, very strong. And you can really put it out there as a bidding war, because that is what it is. It's almost the deepest pockets win. Yeah. It sounds, yeah. But that is the reality.
Your marketing budget needs to be on point in today's days. You can't just go out and splash it on TV campaigns and radio ads like in the past. You have to really box clever. For the smaller players with smaller budgets, you have to really cut that cake really fine in some areas to be really, really competitive in that space. So we found means and ways of doing it. But again, being a volume-based driven sort of exercise, the guys with the bigger budgets will always benefit from the current SEO environments.
And just to give some sense, I mean, I don't know what the typical search is for a car, but let's say, a Toyota for purchase. I mean, how would the kind of typical auction price per ad have changed over the years? I mean, just get a sense. Is it from a few cents to a few rands? I don't know if you can give us a sense.
I can't give you exact figures because it varies so much from brand, as you mentioned. So yeah, some brands would be a lot less than others, but most definitely it has changed from a couple of cents to a couple of rands. You've got to be very smart and very clever about how you go about doing your Google AdWords, and it depends on what space of the funnel you're playing in. If we look at the sales funnel, because it's a lot more generic as you start coming in, and then as you go lower down, it becomes a lot more specific. So you've got to spread it out, and some of the generic terms are a lot more expensive than some of the deeper links. So it most definitely, it has definitely changed.
I think
and it is because, sorry, Rian, to interrupt you, but because it is so many people bidding on the same, same words.
It's not just the platforms, the portals that's bidding against the same. It becomes the dealer groups, the OEMs, all the market players are bidding for the same phrase, the same words. So yeah, definitely, like Melissa said, it went from a couple of cents to a couple of rands. It will get expensive very quickly, and it will continue to do so because there's more entrants into the market, and everybody. It's a very cutthroat industry, like we know. Everybody wants to sell a car, and the best dressed, best priced will get there.
Yep.
Can I just ask about, in terms of your sort of history and shareholders and funding? I don't need the specifics, but just a sense of, was this a sort of startup business where you sort of self-funded, or have you been able to get sort of venture capitalists involved over your history?
So right at the beginning, it was an entrepreneurial business, self-funded and set up, and over the years there was shareholding investment, and it's still in private shareholding at the moment.
All right. I mean, is that a sort of venture capitalist, or that sort of angel investor type funding?
I think it's venture capitalist. That's investors that buys up or invest in a lot of tech companies. Not a lot, but a few tech companies locally. So we form part of that group at the moment. And like I said, it's one private shareholder that's sort of funding the business.
All right. And was that more recent, or is that sort of long-standing?
Long-standing. I don't have the exact dates for you, Mr. Hodge, but it's been a couple of years, definitely, that involvement's been there.
Thank you. The one thing I just wanted to understand better, we had long discussions yesterday about listing engines and syndication software, and I had wanted to ask Autotrader, but we ran out of time. I mean, can I just understand in this space how it works that dealers get content up onto sites, and are there these listing engines that exist that sort of syndicate to various portals? Maybe if you can help us understand that.
So I'm going to explain it as best I can. There's been a move over the last couple of years, I would say really over the last 10 years, a big move to the stock portal or the stock management systems, as we would call it, and then lead management systems that's come into play. So how it works is, yes, you will have a group or a dealership that loads all their stock onto one system, and that then feeds out to all the various portals. We do have a lot of those systems feeding into CarFind. We've got no problem with that. There's no additional charge to that. So, and the reason they do it really is, and I suppose it does really make sense, is if you subscribe to multiple platforms, you don't want to go list your stock on every single one. So that's really why they do it, and they can manage their stock and they feed their own websites as well from that. We do have the ability for dealers to manually load their stock on carfind.co.za. We see about a 70-30% split. So 70% of our stock comes in via feeds, and then 30% is loaded manually. The manual loading is mostly done by your smaller independent dealerships that don't advertise on multiple platforms necessarily, or they don't have the funding to, or the means to actually subscribe to these systems or software companies to do that. What we then also have is, as the stock comes in, there's also the ability, because they want to capture all their leads in one system, is then the ability to feed the leads out to LMS systems again, lead management systems, so that they can get all the leads from all the platforms in one place and then manage it from there. So all of that integration happens all the time, and it is very relevant indeed.
So I understand the larger groups have their own software, is that right? But there's third-party software, sort of independent software providers as well. And yesterday we heard that some of these are owned by the actual portals. Is that the case here?
I think there is a portal that possibly, and I think it was spoken about earlier, the Fusion. I'm not 100% clear, but I know in the past it was one that was owned by a platform, but the majority that we deal with are all independent. They're not linked to a specific group now, or a portal.
All right, so they've seen a gap as a tech company as well and said, small dealers and others need to manage their stock and listings. All right, and presumably, some very small dealers obviously can't if it's 30% for you, but there are players out there that are trying to sell to them, and it's easy enough.
Yes. Yeah. Yes.
And the smaller dealers don't see manual loading as a big issue in terms of using you or another platform, or is it a sort of a hassle that limits the number of platforms they operate on?
I think so. Yeah, historically, a lot of people did it manually, right? So, what some of the dealerships would do is they would assign a platform to a representative, for instance, one of their sales executives, and that sales executive would be responsible to load the stock onto the site, that specific site. I do think it becomes frustrating for some of the dealerships that's got one person to manage all of that, but the majority of them, we don't really get a lot of pushback. What we also try and do, and it's not a service that we offer, we used to in the past, but we're not able to do that anymore, is we do from time to time offer to just assist them with the initial load, because that's really the biggest one, is if they've got 70 vehicles and they've got it loaded on, it takes a lot of time. So we would then offer to assist them once off, just to get the stock on, and then from there they manage it. But yeah, I can imagine for some of them it is quite frustrating in terms of getting that done.
In recent times, we've also worked on the back-end system to make it easier for them to load. So you'll have to go out, either develop the software yourself or use a third party with assistance, so that onboarding of stock can become much easier with the use of technology like mobile phones and the likes of, where previously in the day, like Melissa said, was physically having to sit, take photos, upload it into your PC, and then load the physical stock, which is very manual labor intensive. I think that the smaller groups or smaller dealers with less stock, it's not too much of a hassle, providing that the technology being used is sufficient to assist them.
Thank you for that, and we're sort of learning as we go along, but I mean, are there sort of APIs or things that you have that allows this syndication to happen fairly seamlessly, and that's what portals do?
Yes, that's absolutely correct.
All right, thank you so much. I just want to, I kind of want to go to just, and I know this is a public forum, but just discuss some of the strategic challenges faced by a platform that isn't the one or two. So, I mean, we heard yesterday from Private Property that once they lost some listings in sort of mid-2000s, that it started to shape their strategic decisions across the whole business, because you lose some revenue, so it affects how you can market. It may mean that you also lose then visitors and advertising. So I just wanted to understand the challenge of being, not number one and two, and how it does start to affect your strategic decision making. So maybe just to get a general response from you, and then we'll see if there's sort of more specific questions.
Yeah, I think the first one, as I mentioned, yes, the marketing, the marketing plays a massive role, because that directly impacts your audience coming into the site and the leads that you provide back to your dealers. And that almost does have a little bit of a ripple effect. And as I say, we stagnated a little bit when it came to the SEO. And I don't think that, it's not a secret. We're very open and honest. We've got good relationships with the dealerships and the groups out there. So we then had to, we had no choice but to hold back on rate increases, because you're put under pressure, because the two main ones obviously have the ability to put up their rates, which means there's more marketing, which means there's more audience, which means there's more leads. And if there's negotiations going on and there are some premium things coming through, they do get more leads, which means that the cost per lead or sale could be lower. And when the groups then start looking at that, they've got to let go if they can only afford to have two. And the rates that are charged to the groups or to the independent dealers are exorbitant if you look at the type of budgets they've got. But they're locked in. It's almost, I have to be there, I can't leave, whether I want to or not. And that makes it difficult. So they do move away from the smaller portals, if I can put it that way. But yes, I think we're in a position, so our strategic output, and again, it's what we want to do. Carfund's got a really, really good brand reputation out there. We're a recognized brand. We have invested, very lucky in terms of our our private investor, to give us the opportunity to redo the website and to almost come in afresh. And we are seeing, even in the short time, quite good results. And we've got a lot of people starting to interact with us again. It's going to take some time, but we're very confident that we're back in the market. Not that we ever left, we are still number 3, but if that makes sense. So those are really the challenges, the backing of bigger investors with very deep pockets, media owners, that really all plays a part. And I don't think that's something that a person can turn a blind eye to.
We also have to get very innovative on our website and what we're offering to buyers and to the dealers likewise. So it's a balancing act of, you want to keep the dealers happy on one side, so you have to sort of listen to what their needs are from a seller point of view, but also at the other end, like we've always been one of those sites that Melissa's mentioned before is buyer-centric. So we want to give the user experience to the customer. So we want to bring innovative technologies in the front house, so that the search experience is great, finding a vehicle is easy to do, and to submit that lead is done in such a manner that makes you comfortable in doing it without feeling that you have to do certain things like give out personal information and those type of stuff. And then we bring cool tools in. In recent years we've built our own 360 revolving images for inside views of cars. Back in the day we used to do a lot of those type of things, and we sort of took a back seat with it, but now sort of pre-COVID, just before COVID hit, we started that turnaround strategy again of bringing some of that innovation tech that sort of Carfund was known for back into the fray. So, and we're constantly looking at what's the next cool thing that we can give our users and the buyers that will bring the value through that journey to the dealers at the same time, and give them better leads, better qualified leads. It's not necessarily volume driven, but it's the lead that you're going to get out of that is a quality lead, and will take it to sell much quicker.
Thank you. And so, Ms. Viljoen, you've highlighted, I suppose, it's now twice, that this idea that the dealership has a budget, and when the prices go up for the leading platforms, then maybe you drop the other platforms. Is your sense that they still stick to those two leading platforms, or do they start to drop one of those and then play with a number of smaller platforms?
It is, we see that with some of the independent dealers, most definitely, because the stretch is just too big for them to play on those platforms. So where they would then move back to some of the smaller platforms, yes. But it is really, I can't say that it's the majority of dealers doing that, but there is a sense of, I can't keep on doing this. At some point I need to look at spreading my visibility as well, because people do visit various platforms. They don't just visit one or two platforms throughout their search journey. So it's almost important to be on multiples, but you're limited to how many you can do based on your budget.
And so just to understand almost that budgetary, I mean, as you sort of indicated, you can't just push through big price increases. You've got to look at your rates relative to elsewhere and the marketing spend of these groups. But you also feel the need to charge because you want to generate some revenue. So you're in a little bit of a balancing act between, I've got to charge some people, but knowing in doing so I'm going to lose others, and almost optimize your revenue. I mean, is that what sort of happens?
Yes, absolutely. We have to. We are a revenue generating business. We unfortunately have to make revenue. Not fortunately, that's what everybody is in business for, and we definitely do have to balance it. But we've got to be conscious of what we charge the dealerships out there. And we really do. I think one of the big things is the fact that we really try and make it as fair as possible on everybody. Every dealership needs the same exposure. Every dealership deserves the same exposure. So I think it's very easy to put things in place where we could bolster some, revenue from different things, but we stay buyer-centric. So even by allowing a dealer to have a preferential ad or a different placement on the site, you're really not giving the buyer even, what they're there to search for. You're serving them what you want to serve them because of the revenue you're generating from it. So we have held back. Besides the rate increases we haven't had, we've also, since COVID, really tried to come to the party where we have done some concession rates even for some of the smaller dealerships where they said we just honestly can't. Stock has been a massive issue in the industry as well from a car dealership point of view. So where they may have been able to be on a standard package, we had to, say to them, we completely understand that you now have, below 20 vehicles, so we're going to assist you. We have to. That's the fair way of doing it. And that's the reality.
And us. I mean, I just want to ask if the fair way of doing it, as you put it, I mean, is that partly the fact that you obviously need these dealerships on your platform? You're not a sort of number one and number two, so you kind of need to, I suppose, be upfront and fair with them in order to just persuade them to join you and remain.
It's sort of a vicious circle because you need the dealers on your platform because they bring the vehicles and the stock and options to the users. So without dealers on board, without stock on board, you don't get the visitors. And you don't have the visitors, you don't have people submitting leads, and you're not generating buyers for those dealerships. So it's really it's a vicious circle. So if you don't generate an audience and you don't spend money on SEO and you don't market effectively, you're not going to get the visitors to your site. You can have a lot of visitors on your site, but then you don't have the dealers necessarily. So it's a very delicate balance, which the bigger guys are sort of got right. Spending the right marketing and generating a good platform for buyers, and then signing on and keeping those dealers on. For the smaller players, it becomes a bit tough, because your marketing budget is just not as big. So, we have to box clear with what we have.
I think if I may just add to that, Rian, and part of your question is, even before the 2017 dip, I can almost say that's where things really started changing. Car funds always believed in a fair pricing policy. So all dealers paying equal rates in terms of what they put on the site. We don't believe that a dealer situated in a certain area is justified to be paying more than a dealer in a different area. Everybody gets the same exposure on the website, and therefore we've always tried to remain as fair as possible.
And South Africans don't buy regionally. We've seen that. We've done a study a couple of weeks ago, comparing to how these platforms operate in the UK and Europe, and where they would search for dealerships close by because they don't want to go and travel far and look for a car. South Africans are way different. I don't mind staying in George looking for a car in Joburg because I can easily go up the weekend, fetch it, or they deliver it to me, where I stay. So, that's why we flat rate our stuff as well, because South Africans buy where they get the best deal, and the car they want, they'll go get it or get it delivered.
Yeah, that is interesting. I didn't realize that we did a lot of that. I mean, that can't be the majority of the market, though. I would imagine still that people will buy local, but maybe, well, let me ask you, I mean, is it more that if I'm in a rural area or a smaller town, the options from local dealers is quite small, and therefore it may be worth my while looking for a better deal elsewhere, that railing it down or flying up and driving it back actually is economic?
The opposite's also true.
The
opposite's also true. Joburgers will go to the Free State to buy a Hilux Bucky because the pricing is, it's a good deal. So it's not necessarily that they'll all come to Joburg for goods because there's a range of stock and the availability is more. We're price sensitive buyers in this country as well. We're looking for the best value at the lowest price. So, I'll go buy a car in Craddock if I have to because of the mileage being low and the price being right.
Yeah.
So it's what I would say.
Yeah, if we actually look, sorry, Rian, if we actually look at the search patterns on our website, your biggest filter sets that are used is really your brand, model, price, and then location is really sitting under 5%. So people are always searching for the car first. And I think it's got a lot to do, if you think about it, with the used car market. Because every single used car is unique. So you might be looking for a vehicle and it is only available, for instance, in George or in PE. And I mean, I can't, obviously for confidentiality reasons, I can't mention the actual dealership. But, we've got a dealership in George, and 70% of his sales is not within the George area. It gets either sent to Durban, Cape Town, or to Gauteng. So it is really, it's all over. It's not where your dealership is located anymore.
Just to go back to the sort of business strategy, I suppose that my question was more, I suppose when you look at sort of the sort of relationships between parties, obviously the power dynamic can come into that. So who's got more bargaining power? And I suppose my question really is, as a smaller platform, do you find you have less of that power with the business users, and does that drive you in some respects to have to deal more fairly with them?
Yeah, it's I think to a certain extent, yes, from the business user's point of view. But I think the outs or the strategy we've got in place now and the way that we are approaching things is starting to take off. And as COVID also starts to become a little bit more, a thing of the past, and as new stock is arriving into the country, there is a little bit more of an appetite to start looking at expanding into other third-party platforms. And then with the changes we've done, we believe it's a journey, right? It's not going to happen overnight, but we do believe from a strategy point of view, we are in a position where we can definitely grow.
As a business, and when you talk business strategy, businesses need to do what they need to do. It doesn't matter, in terms of size. Smaller players definitely need to do it differently. Whether it is through restructuring of our business, whether it's changing or getting investment to do different things in marketing. We rely on different partners to get that done. And I think this is what you're referring to, is that the other players have different backing to get that done. So definitely as a smaller player, we definitely need to be much more innovative in the way we approach business, whether it is by not increasing our rates or for a period of time, or structuring the business in a certain manner to make sense, or to move our operating budget in different ways to make it work for us.
Yeah, and that's what I just want to understand is, you've kind of had to adjust your revenue. You're getting who you can. And this is where I just want to understand, maybe your goal is to at least break even. So you kind of may have to cut back on marketing. But as someone who's in it for the longer game, you set out a strategy to how you're going to turn it around, do some things differently, as you said, Mr. van Jaarsveld. But at some point, do you need a bit of another investment just to relaunch, put in either that better user interface that you've conceptualized, or the marketing campaign to get you a bit of a kick? So it's that balancing of sort of humming along with what you can and break even, and then do you need still the investment to get the real kick, or can you just hum along and slowly build up again?
It will be a combination of the two.
Yes.
So in one sense, we obviously as a business want to be sustainable ourselves, and through the efforts that we do is to grow that base, get more dealers on board, grow our visibility in the market, and certainly then get the support from our investors to also additionally invest so that we can in certain areas spike certain delivery points much better. So I think it's a combination of the two.
Yes.
Right, I think I get a better understanding, because it's always good to hear from someone who's not the top platform to understand their decision making, and I think that's helped certainly a fair bit. I just want to check across the team whether there are any other questions before I finish mine. I think that's probably the extent of the kind of questions we've got. Maybe just a question for you around sort of where do you think this is moving in terms of the aggregator and the car search? Is this the sort of pattern that we're going to be in, or is there any massive disruption you think is coming to this market?
So I've got to say, I think a person must never discount the disruption that may be coming. The person can easily, I don't want to say be blindsided, but it is very true that some of the global players seem to be dabbling a little bit in what we're doing in South Africa, and having some views as to where they want to go. The Facebook marketplace and the Google shop, all of those things will eventually, definitely, I believe, play a part. So from a South African point of view, I believe we're all passionate and we're all going to carry on and play very hard. But I do think there will be influences coming into the country, perhaps from an international point of view, that may disrupt. We saw the inquiry just, 2 years ago, Rian, where there was the acquisition of Naspers, from a We Buy Cars point of view, that didn't go ahead. And again, they are one of our customers, so I'm really not trying to, put something forward that's not, that's being disrespectful at all. But that is the type of realities, is there are people wanting to enter South Africa and almost dominate the market, not just from a platform point of view, but from a motor industry point of view. And that's something we have to keep a close eye on.
I also think, there's a lot of players, and I think the previous speakers referred to them as well. The likes of the Googles, the Facebooks, those type of platforms that can be the disruptive market. But I think we should also not be blind to our local sort of competitions that if we just remember what Cars did, and Mr. Mini alluded to that, where Cars came out of nowhere and very, very quickly took up the number 2 spot. And in today's world and where technology is leading us to, it might be one of the much smaller type of entities that's just got that niche offering and a technology that is unique, that's driving a new buying generation, the Generation X, the millennials, is buying much differently from an online perspective. And we must also not discount how car sales is evolving globally, from going from a dealer-centric environment going to the e-commerce environment. Buying big ticket items online will become relevant. So, I think those are the things that we need to keep an eye on and keep abreast of, because it's not necessarily only the way things are being done today that will evolve and generate that pattern. There's technologies and there's businesses out there that's coming through the fray that, it's maybe not going to be big business, but it's going to be the small pockets of technologies that's going to be very competitive in the sense of what they're offering into the market.
I mean, do you think someone doing more of the same, as in the sort of auto portal, is the more likely disruptor, or someone doing completely different or coming from a different position? Just following up from what Mr. van Jaarsveld, you were saying.
I think, again, it's difficult, if I had a crystal ball, I would have given you a much clearer answer, because we don't know. Technology is advancing so quickly. Stuff that we're working on today is already old. So I think it's going to be, a unique offering and doing something differently. And I think all of the platforms are sort of looking at what's the next great thing, what is the next technology that we need to bring on board to keep it fresh and keep customers coming back for more. But I think definitely there's players in the market, and not just locally, but internationally, that can come and disrupt this market by a unique offering, getting the model right. We've been looking at international businesses for a while now. With one of our other products, we can see that the buying behavior of customers are going to change, and an e-commerce sort of environment for car sales is going to be more relevant. The introduction of electronic vehicles. I know South Africa is not quite there yet, but it's definitely something that we're going to get pressured into, is to change the type of vehicles that we not just buy here, but also manufacture in South Africa. So there's a lot of technology-driven things that can disrupt this market as well. So doing more of the same of what we're doing today, if you're just going to keep doing what we're doing, you'll end up dead in the water, I think. You need to keep abreast of technology. You need to get abreast of how people buy, and also what this auto industry is going to evolve into over the period of time.
All right, thank you very much, and I think that's all the questions from the panel and technical team. So I think it's just left for me to thank you, Ms. Viljoen and Mr. van Jaarsveld, for making the time for us and coming to share your insights with the inquiry. And we look forward to looking at your relaunch, and all the best with that. I'm sure we may have some follow-up questions, but we will try to at least let you focus on your business for a little bit.
Thank you for the opportunity to participate, and good luck with your process going forward. I know it's been a long process,
yes.
So good luck to you guys as well.
Thank you very much. And so we're going to close the morning session, and the afternoon session at 2 we start with cars.coza, and that's the only participant left for today. Thank you, everyone.
Thank you very much. Bye-bye.